So with Nvidia stock reporting their earnings next week, I thought this would be a great opportunity to go through a shareholder letter that they released recently, where they outline some of their struggles in the last year and the reasons why they lowered their guidance. The two big things that stand out from this letter are that the first is fourth quarter revenue expected to be 2.2 billion versus guidance of 2.7 billion, which they already lowered from the last earnings report if you recall. And the second is that gaming and data center revenue will be below company's expectations. So before we go any further, drop a huge like on this video, guys. And if you're brand new to the channel, join the community. We're almost at 10,000 subscribers strong, and I'd love to have you on board. But anyways, getting back to the topic. So Nvidia's core business really is around its graphics cards and data centers. But the problem is, based on this report that we're seeing, data centers and their graphics division have both suffered in the last quarter. Gaming is something Nvidia typically does really well in as well. Most gamers love to purchase high-end Nvidia graphics chips, but unfortunately this quarter was not as strong as expected. Now, in my opinion, the most concerning thing here is that the revenue was decreased again from 2.7 billion projected to 2.2 billion projected. Now, if you look at the same quarter of last year for Nvidia, which is Q4 for Nvidia, we can see here that revenue of 2.91 billion was reported, which was up 34% from 2.17 billion a year before that, and up 10% from 2.64 billion in the previous quarter. Now, this is very strong growth in 2018, but when we compare this to Q4 2019, we will actually be posting revenue growth that is down year over year and quarter over quarter. Revenue of 2.2 billion will bring us to around 25% down year over year, down roughly $710 million. And quarter over quarter will also be down around 31% or $980 million. So this means we'll be going from around 3.18 billion last quarter to around 2.2 billion roughly this quarter. And speaking of last quarter, that's when Nvidia actually had record revenue come in from the data center segment. So this is a bit concerning to see that growth is slowing down here. So a decline of 31% in their revenue is huge. And as a result, the stock did adjust accordingly. It did correct massively from its highs, and now it's sitting at around $150 per share roughly. So now looking at the shareholder letter, the first thing that they addressed was the gaming sector concerns. So as you can see here, they acknowledge that a big part of this decline is the cool off after the crypto boom. Now, even though this is the case, they have accounted for that and have adjusted their inventory accordingly to expectations. However, a new concern has come up, which is in regards to China, where demand for Nvidia gaming GPUs has weakened. Also, their sales of certain high-end GPUs using Nvidia's new tiering architecture were also lower than expected. Now, this seems to be due to the higher price tag that Nvidia posted for these graphics cards, which consumers don't seem to be willing to pay a premium for right now. So clearly what I can see here is that Nvidia overestimated the growth and adoption of their new chips and their gaming segment in general. And as a result, now they're getting a reality check and they're going to have to revise guidance, which they have already, down much lower than they initially predicted. They also stated here that they delayed the planned production ramp of several new products to allow excess channel inventory to deplete. So this could be a good thing for Nvidia stock in the back half of this calendar year, and that's because they do have new technology that they want to release, but they first want to clear out inventory, which is a good move in my opinion, but it is going to hurt them because now AMD, their biggest competitor in this segment, is going to be able to leapfrog them in terms of their architecture, in terms of the products offered, and Nvidia might actually have to play a catch-up game here to AMD, so it is something shareholders should make note of. So I mean, there is good and bad points to having the new chips being delayed. If Nvidia releases these at proper price tags, people will adopt and buy these chips, and in turn their revenue will be stronger than expected. But if they wait too long, then AMD could benefit from this delay. So data center is the other segment that the shareholder letter addressed. So the culprit for the decline here is because a number of deals in the company's forecast did not close in the last month of the quarter as customers shifted to a more cautious approach. Now, Nvidia clearly believes that this is just short-term weakness, which if true, could help them post very strong numbers, like I said, in the second half of calendar year 2019. So what could happen is we may go from lowering guidance, which they did have in this past quarter, to actually raising guidance in the back half of this calendar year, which could again push a lot more momentum into the stock and a lot more bulls back into the stock. So really, in summary, what I'd say is that the deals that didn't close in the last month of last quarter should most likely close in this current quarter or in the next quarter, which in turn will affect their future earnings, like I said, in the back half of calendar year 2019. Now, because of all this, they do expect their GAAP and non-GAAP gross margin to be impacted by around $120 million in charges for excess DRAM and other components. So the bottom line here is don't be surprised with a loss this quarter. And here's also a chart that they released summarizing their guidance from what they initially projected to what the revised guidance is now. And as you can see from this, the revenue is going to be down projected, gross margin is supposed to be down, operating income is supposed to be the same, gross profit is up slightly, and the GAAP tax rate is down. So what I would say here is keep in mind that even though they did release these projections for the quarter and the upcoming earnings report, nothing is really set in stone. Things could change. We still could have a miss. We still could have a beat. So they're trying to caution investors here to not make a judgment on their position based solely on what they've released here. But pretty much, in my opinion, the stock has already adjusted to what they've released here, to a $2.2 billion revenue for the quarter. So unless they miss even more or they beat significantly, I don't think we're going to see too much of price movement here. Now, the next thing I want to show you is the EPS estimates for 2019. But keep in mind, these are just estimates and anything can and will change. However, it is important to make note of these numbers and be aware of these numbers because it could influence your decision to invest in a company like Nvidia. So as you can see, fiscal year 2019 looks to be much less profitable than fiscal year 2018. However, the back half of calendar year 2019 should help us get back closer to 2018 levels. Now keep in mind that some of the 2018 results are skewed because of the crypto boom that we had with Bitcoin. And now that we're getting back to actual reality of the business, data centers, graphics, gaming, the stock may be in for a slower year this year in 2019, with the stock price not moving much higher than $150 per share. But I think 2020 could be the year where Nvidia stock gets back on track for good growth and as a result starts moving higher as well. So if you're looking to build a position in Nvidia, you haven't opened a position or you already have a position open, 2019 may be the year to actually dollar cost average to get a good cost basis on this stock, and potentially a few years out is when you could potentially see some pretty big gains on this position. Now, I'm not telling you to buy the stock, but I'm just giving you my thinking behind what I would do if I were to invest in Nvidia right now. So like I said, Nvidia stock is currently hovering at around $150 per share, which coincidentally happens to be where its 200 moving average is on the weekly. Now, we had a big sell-off from the highs near the 300s, and we've since corrected over 57% from those highs. Now, I think that we'll stay at this level around 140, 150 until earnings report, until we can decide on direction, unless there's nothing good or bad that comes out of this earnings report. Now, it could be a very similar situation to Facebook stock or Apple stock. So if you look at their charts here, you can see that both Facebook and Apple hovered around its 200-day moving average on the weekly for a couple of weeks, and then it started to move higher after their earnings report. But of course, the market has been acting a lot more bullish lately, and this has helped these stocks recover. So unless we have some sort of macroeconomic downturn again, I think Nvidia will most likely follow this trend as well. So guys, I hope you enjoyed this video. Hope this was insightful to you. Remember, drop a huge like, 150 likes on this video. Let me know if you're an Nvidia stock shareholder and how you're positioning yourself for the upcoming earnings report, which I believe will be on February 14th this year. Either way, guys, don't forget to invest positively, and I'll see you in the next one. Peace.